In the 1990s, he created a billion-dollar copper producer. In the 2000s, he launched what would become one of the world's top primary silver producers. And in 2015, he started what he believes will be his third billion-dollar company, attracting shareholders like the Sprott Group, Rick Rule, Doug Casey, and Marin Katusa. This is the one gold stock to research right now. Visit futuremoneytrends.com/investright. Greetings and thank you for joining us at futuremoneytrends.com. I have a great interview for you guys today. It's going to be the topic of silver, specifically, where we're going. What does this look like compared to previous bear markets? I have the two top guys. David Morgan of Silver-Investor is a regular keynote speaker. People pay him for his private consultation. He has a paid letter if you're interested in his suggestions and seeing some of his in-depth research, although much of his really ridiculously good research is all over the web on Twitter. It's at his site, The Morgan Report or Silver-Investor. David Morgan is a good friend of the show and without a doubt, the most knowledgeable guy on the silver markets. David, thank you so much for joining us.
My pleasure. Thank you.
Our next guest is Keith Nuemeyer, CEO and founder of First Majestic Silver. He's the founder of First Quantum Minerals, and he's also the founder and current chairman of First Mining Finance. Now, Keith is very, very unique in the resource sector. He has built $2 billion giants. Today, he is the CEO of First Majestic Silver, which is the second largest silver producer in Mexico. He is the chairman of First Mining Finance. It's only 9 months old. They have acquired 4 companies. One of them, their first one, they did a hostile takeover. Keith is set out to acquire great assets from distressed sellers. While we're in a resource depression, a bear market, he's building a large portfolio of high-quality assets. In 9 months, First Mining Finance has become one of the fastest gold developers in the world. Keith, thank you so much for joining us today.
Thanks, Daniel, and nice chatting on a green day, finally, first day of the year.
Sure is, yeah. The markets are red, but the resource shares across the board are doing quite well. And why don't we just start off with that? You guys have been through several of these cycles. You've studied the markets. Is this just at the stage we're at, where now we're going to start to see all these guys who've had a party for the past 5, 6, 7 years, and where the resource investor has been in depression, and now it's simply going to switch, where here the Dow Jones is down significantly, and gold, silver are rallying with the dollar. The mining shares are up across the board. David, what do you think?
A little bit skeptical. I actually forecast this in the last report. What we saw last year was a nice rally through January. I think we're going to see that. Obviously, today is a pretty good start, and I think it'll continue. What I'm skeptical about is whether or not this is, going to go more than, let's say, a month and a half. That remains to be seen. Of course, I like it, but it may be a trader's rally rather than a long-term investment strategy at this point.
Keith, what are your thoughts on the action so far?
Well, calling a bottom is always, not only difficult, I think it's impossible. And, the reason why I put First Mining Finance together is because, I'm accumulating assets at what I perceive at or near the bottom at historic lows in the sector that I'm taking advantage of. So, whether we're at the bottom or close to the bottom or a month away or 6 months away or 1 year away, to me, I don't really care because it's a great time to be accumulating assets right now. But interestingly enough, if you go back to 2000, 2001, where the last bottom was, it was really the crack of the NASDAQ, the crack of the major exchanges, the Dow and the NASDAQ and so on, that really started the whole precious metal rally in 2002, which lasted 10 years. So, actually a little over 10 years. And so, who knows if we're there again, but, we're seeing some pretty interesting action, obviously.
Before we get into the bullish case for silver for 2016, and really a behind-the-scenes look at kind of what you guys see with your research and the people you talk to and the things you guys are seeing in your own businesses. I wanted to kind of look at why silver would not rise in 2016 or why the bear market could continue. It's kind of almost the answer people want to hear nowadays. You know, people have purchased silver specifically for monetary reasons because of the supply and demand fundamentals, as well as just because the price is really low relative or compared to what we saw in 2011. So before we look into why silver is a good investment, I want to ask you kind of a devil's advocate. Why would silver not rise in 2016? What would hold the price down to even make newer lows in this cycle? David, please.
The paper markets, there's no question about it. I mean, if you look at several instances, the one that comes to mind is the sell-off in a few years back when silver was holding at $26 level and gold about the $15.50 level. The amount of silver and gold sold on paper was astronomical, done in the aftermarket in the Asian markets, and that amount of selling can be done on paper because markets move on buying and selling pressure. That was extreme selling pressure. So if that were to take place again, let's say in the aftermarkets with an extreme amount, it would drive the price down. It's what I call spike low. It doesn't usually last, day after day, week after week. It's usually a 1 or 2 time event in a short time frame. But it takes the market down far enough where it causes a lot of disruption and it causes psychological, especially at those levels I just mentioned, the psychology's changed basically at that point because the metals had held up at those levels for so long. So it looked like that was the floor, and it turned out not to be so. I just want to add that I don't think that would be something that would continue the whole year. I mean, they might take it down and keep it there or, sell it off some more sometime during 2016. But again, in those sell-offs, they're usually an event that doesn't necessarily take it down for, a very long point in time. I think we are, as Keith said, no one could call an exact bottom. I mean, I've gotten there a couple of times. My top calls have been much better than my bottom calling. But I think we're low enough now that if anyone has their head on straight and understands the fundamentals and the technicals of the market, that this is a time to accumulate. And that means you buy when it's low enough to really not be making much of an error. If it gets sold off as I described, then you might increase your accumulation pattern for a while.
Keith, same question. What would cause new lows this year?
Well, silver is being caught in this whole deflationary scare, which has been, being generated by, the slowdown in China. So currently the world is awash with lead and zinc and copper to a lesser degree, and the above ground inventories of those metals are quite high, and it's going to take some time for the inventories to deplete themselves. Likely close to a year at current levels, and that's a lot of supply that we have to eat through. Silver is not in a surplus. Silver is actually in a deficit, but the trade is very psychological. So, if you're negative base metals, silver often gets caught in that trade. Sometimes silver is looked at as a precious metal, but usually in a negative base metal market, silver does get sucked in. So if we see, sub $2 copper, and sub 70 cents lead and zinc, and we were there just a few weeks ago. We're now over that currently, but if we see sustained levels of lead and zinc in the mid-60s, that's going to be negative for silver.
Gentlemen, in 2015, gold and silver were down about the same. Platinum and palladium, though, were down huge, 30% range. Iron ore down 45%. Has silver specifically decoupled itself from the other metals like a platinum and palladium or copper and really kind of joined and tied itself more to gold, where it's this monetary metal, where silver has been viewed as an industrial play as well as a monetary play, just like platinum and palladium. However, in 2015, silver traded much closer to gold than platinum and palladium. Has it decoupled itself from that industrial side? I'll send that question to Keith.
Well, platinum palladium, again, is getting caught in the whole slowdown of the world economy, and because, it is very much related to automobile manufacturing. There's a perception that there's going to be, less consumption over time, and it's again a psychological trade. Auto sales have actually been quite strong, but it's very psychological, and it has underperform gold, for example. And I'm not as bullish as others on platinum and palladium. I believe that over time, platinum and palladium will be replaced in automobile manufacturing, other than fuel cell cars, as they do come out, because platinum is required in fuel cells. But in the current construction of automobiles, the catalytic converter, there's a lot of research going on replacing platinum and palladium with silver. It's already been done in diesel fuel engines, and I'm expecting that's going to be done in gasoline engines as well. So I'm not as bull on platinum and palladium as others may be.
David, do you think silver's decoupled itself from these other metals and is now more on the side of the gold trade?
Yes, I do at this point in time. I mean, your question's a good one, but it sort of depends on where you put the starting line. If you look at a certain block of time frame, you can, make almost any argument you want. But I'd say, yes, it has at this point in time. And I think that indicates, as Keith said, silver's dynamics are very strong for many reasons. And it is acting more like a monetary metal at this point in time.
Gentlemen, I've been making videos since about 2008 about the markets and precious metals. We've put out several of the big micro docs for silver, and we used to see a very positive response. And I don't want to say that we're not seeing a positive response in the terms of views and likability, but I am seeing us, over the weekend we put out a new silver video. I'm seeing a lot of hate towards the metal itself, and that's unique. Of course, I have my critics. Any newsletter writer or anybody who's doing anything has critics. But aside from your regular critics, there are people who hate the metal. They hate the trade. They hate the idea of owning precious metals. And my question is, in previous bear markets, is this what is to be expected and seen, where people actually, I don't know, maybe it's the internet that's kind of opened it up, but people hate silver out there. Is that what you've seen before, David?
Oh, absolutely. I mean, having been through the cycle one time before, I give you story after story. I'll just be succinct to say, yes, just because the internet hasn't changed anything. Psychology of people hasn't changed. The internet just gives them an easy access to criticize someone or something. But it's very similar to what happened in the last bull market after the run-up in January 1980. The after effect was very, very negative for quite some time. The video, I put it out on my Twitter feed and got some of your love if you read what I'm saying. I just want to talk about the video a little bit. First of all, a shortage and a deficit are two different things, but there has been shortage in the metal on the retail side only, but a retail silver shortage, i.e. a coin shortage of, let's say, maples and eagles, doesn't mean a silver shortage. There are two different quantities. One is about 12% of the market, total coin demand, and the total demand for silver is silver, and a lot of that's in commercial bar form. The other thing I'd point out was that you talked about the scrap supply. I think you did a good job on that, but I want to point out for everyone's benefit that the Silver Institute did a great study on the scrap demand, and they did what I think, and I agree with, that no matter what the price of silver does, the lower boundary is about 170 million ounces a year. The other couple of notes I made,
which we're at about right now, right?
Yes, yeah. And on the China situation, certainly I believe China is certainly, not driving the commodity sector. But what I want to point out for everybody's, thought process is that China growing at 5%, and I'm not saying I believe their numbers, I just want to do a simple arithmetic for everyone. If you go back, say, a decade or so, and China was growing at 10%, and their economy has doubled, and now it's going at 5%, what that means is it's growing at the same rate it was 10 years ago. And this is something that people don't take into account. Now, I'm not making a case that the commodities boom has started again or anything along those lines. What I'm trying to point out is that even if it's 5%, 4%, 2%, China's still growing. Again, I want to repeat that, that doesn't mean that I think that the commodity cycle is ready to start up again. And I think the last thing that I would just say for my readers' benefit is that, we have a discrepancy on what we think about the zinc supply, but the Morgan Report readers know that, and that's, on the website for them. I just want to air it for everybody's benefit because, I've got a pretty good membership base who say, well, you didn't say anything about zinc, so I'll just state it in that gentlemanly manner.
Well, thanks very much, David. Keith, for the hate towards the metals, is this what you've seen in the previous bear cycles?
Well, I don't remember January of 1980 that David mentioned. That I've got into business in 1984, so I've been through a few cycles myself, and there was some hate on mining in the late 90s, 97, 98 to be particular, and that was really around the big controversy, due to the Bre-X scandal. But since I've been in this business for 34 years now, I've not seen the hate that we're now experiencing. The valuations that we're seeing in the mining sector are at crazy levels, where you can buy ounces in the ground of gold, for less than $10 an ounce, which is nothing I've seen over my career. So, yes, there's a definite hate on the industry, and I think that's telling me that we're at a bottom.
Yeah, David, the mining shares, they haven't made a low in 6 months. They seem to be rallying on any small movement the underlying metals make. Do you think the mining shares are a leading indicator when people are watching the trade for 2016 for the physical metals?
Yes, I do. In fact, being a long-time newsletter reader myself and subscribing to many over the years, Jim Dines was the one that actually pointed out to me when I was much younger than you, Daniel, when I was in my early 20s, that the shares usually led the physicals. And again, yes, that's a great thing to bring up, and I think it's the case. Just for the benefit of people that watch my work very closely, I've made a couple calls there that I thought that was the case, and we're ready to, start rallying, and they have failed. But, again, going back to what Keith said, and I've said this too, I try to be very consistent, that it's very tough in this market to call a bottom, but you can accumulate when you're in a situation as we are now where you can actually buy the metal at such low levels, not only in the ground, but physically, because most miners can't really survive at these prices. So if you're smart and you've got a pretty good idea of how to invest, this is where you accumulate.
Yeah, and anyone listening to this show, you go to Silver-Investor or the Morgan Report, and you can get David's top picks. He's got a premium members area for everybody. Keith, with First Mining Finance, you're trying to acquire many great assets. You've referred to it as a mineral bank. Do you feel under the gun to quickly accumulate assets right now? Because we may be at the end of a bear market, or maybe even, who knows, in a recovery, as far as we know, when we look back at this in 5 years from now. Or do you think there's going to be plenty of distressed sellers in 2016? Because you've already acquired 4 companies in 9 months. It seems like you're at full throttle right now.
Yeah, it's interesting because a lot of the targets that we have on our list have actually gone up in value over the last 12 months as a result of our business plan. We're being watched very closely. There's lots of people out there that are anticipating what our next move is going to make, and they're trying to take advanced positions in some of our targets. We know that's happening, and we kind of expected it. I think we were pretty lucky in getting 4 deals done in 1 year. That was ahead of our expectations. To go from 0 ounces to 8 million ounces, in 9 months, as you say, was quite the achievement. We're going to try to accomplish that again in 2016. We have a target of doing 3 to 4 deals in 2016. I don't know if we're going to get them all done, and I'm hoping the prices are going to remain low for at least the next 6 or 8 months, where we can take advantage of this market. But the market looks like it's getting a bid. We are in season rally time. In early 2015, we had gold go for up to $1,250, and in a matter of 4 weeks. And in the case of First Majestic, we actually did financing in March of $30 million, which allowed us. That rally allowed First Majestic to raise some capital, which was obviously very good. And in the case, but it died very quickly. By June, July, we're at new lows again, and the market was pretty tough for the rest of the year. So, to David's comment earlier, he's kind of a little bit reluctant to call it a bottom, for that exact reason, and of course I am as well. But every year is not exactly the same. And there is a lot of people looking at this market. So anytime gold is up or silver's up, people just jump into the stocks right away because they're afraid to miss the move.
Yeah, gentlemen, when I was doing the research for the silver video, I was looking at some data from the USGS showing big declines for, Canada specifically and Australia for silver production, smaller declines for the U.S. and Mexico. I have no idea what the numbers will be when it's all said and done for 2015, but do either of you believe that mine supply will see a contraction compared to 2014 new mine supply? David?
Oh, yes, I think this year will be down slightly. I think the Australia comment in your video is very telling because, as you know, 25% of the supply comes from primary silver producers, and most of the rest comes from base metal mining, or gold mining actually produces about 12-13% of the silver supply. But because it's off 41%, that shows you the base metal miners are really getting hit because most of Australia's mining is these huge conglomerates like RTZ and BHP. And with that off so much on a percentage basis, it shows you that the silver supply as a byproduct is going to be down rather measurably.
That's significant. Keith, I mean, you talk to other silver miners. You obviously run a primary silver producing company. I think it's the second largest silver producer in Mexico. How much do you think mine supply could fall from 2016, this time a year from now, compared to 2014? Do you foresee and expect a significant decline in new mine supply?
Well, I've not put any numbers to it, and I know Mexico, of course, is down, and you've addressed that in some of your previous videos, and I've quoted as well as talking about Mexico being down 5 or 6%. I think you had quoted a number of 4%, and Australia's down, Russia's down. All the big suppliers of silver or producers of silver are down. But it's not just silver; it's metals right across the board. And I was talking about price of lead and zinc earlier, which are really the fundamental drivers to future supply of all metals, because those are the big commercial metals, and those are the drivers of mine life and mine supply, and mining is a industry. So because they are such important metals, and if we see sustainable prices at lower levels, then you're going to see major mines come offline, and there's 2 large mines coming off this year, or actually just in the process of coming off, and we're losing 1.1 million tons of zinc concentrate in the next few months, which amounts to about 15% of the world's supply. And there's a ton of silver in that. It's about 50 million ounces of silver in that production. So it's big numbers, and I expect that's going to continue.
Okay, so precious metal prices are down. We're seeing supply. There's some supply destruction coming in the future. David, I talk to newsletter owners, bullion dealers. I attend a few conferences. I know you attend a lot more. But one thing that is a constant when I talk to these people, the participation for the newsletters, the participation for the bullion from the smaller guy, it's just anemic. Yet headline after headline, these coins and bullion, the demand is through the roof. Where is all this demand coming from for American Eagles, Royal Canadian Mint, the Perth? I mean, it's just through the roof for these coins. Yet, in every other in every other observation, it shouldn't be. Where's it coming from?
Great question. The hypothesis is that it's not from the retail investor. I mean, generally speaking, the coin demand comes from the small investor, and certainly that's held true for a very long time. However, the hypothesis right now is that the retail investor is pretty burnt out. They basically, put all their money on silver or whatever their take on the market is. A lot of silver investors are kind of on the sidelines. Not many are adding their positions. So again, to repeat the question, where is the demand? And the demand would have to come then from the institutional side. So if you took a large banking consortium, bullion bank, that type of thing that had demand and wanted to buy into the coin demand or into the coin market, they certainly could drive that demand. So as a hypothesis, I would say certainly think about that. There's, other writers out there, Ted Butler being primarily the focus, that he stated that one of the major banks has put in a huge demand on the coin side. Certainly the demand is there. I think that's absolutely provable. Where it is, to splice it up, it's a little bit more difficult. But I would give him, state that I think that the demand from that side of the market is greater than probably most people think. Most people think it's got to be, the little guy seeing these low prices and really taking action. I think that's only part of the story. I think a lot of it has to do with institutions.
I talked to a bullion dealer who you are close friends with, David, and we can talk after the call because I don't want to put him out on blast on a public interview. But they said that they told me that 5 buyers were essentially 90% of their business over the last 2 months, and they were doing a lot of business though. Keith, same question. Are you seeing the same thing as David, where it could potentially be institutions? Because obviously the retail guy, by all accounts, is not in there buying silver by the record.
Yeah, no, I agree with David's comment. And, we've got some firsthand experience. We obviously sell our own silver products on our website. And, so we've got a pretty good feel for, what's going on in the retail market space. And I've also walked into many retail stores as well when during my travels. And I see that, there are very few customers walking into these stores. The retail sales are extremely low. Our sales on our website are at historic lows since we've been offering our products. And so, I just, believe that there is some hidden buyer out there who, is a bank, a government, an institution. Who knows who the buyer is, but it is not the retail public.
David, in 2008, about 5% of silver demand, according to the Silver Institute, was coins and bars. For 2015, it looks like we're going to be about at 25%. Industrial demand makes about 52% for 2015. Still, that's an estimate. As opposed to 2008, it was about 69%. Is this a good trend that we're switching almost from a monetary demand from this huge industrial demand? Is this sustainable?
It is. That's just where my worldview is different than, let's say, a lot of the more establishment silver studies that you might look at from out of New York or out of Washington, D.C. My view from the beginning has been that silver will be driven by monetary demand. It will be due to the economic conditions that are deteriorating. And because of that fact, people go to something that they trust. So if confidence is lost in the paper paradigm, they'll move into something. And the run to gold will be phenomenal, and silver will go along for the ride. Silver is such a small market. There's a lot of people that have let's say lower net worth than most gold investors. The demand will be insatiable. If you think about it, and you think about money in real terms and not currency, there's really an infinite demand for money. And an infinite demand is a pretty big demand. It's just that the trigger, the catalyst, or the impetus to do so is certainly not here at this, bottom or forming a bottom in where we are right now. But things could turn around rather quickly, and I think this could be the year that takes place sometime during this year.
Keith, an interesting question. Why all the demand for these physical coins, physical bullion, the metals, or, it's like I said, it's through the roof, but we're not seeing the huge demand surge for the shares. Throughout this entire downturn, especially the last 24 months, the price keeps going down, but the demand for the physical metal is just relentless. However, we're not seeing that bid for the mining shares yet. Or maybe we're starting to right now.
Well, this is, comes back to our earlier comments from both myself and David. This is very psychologically driven, and I disagree with Dave's comments somewhat that it's going to be the monetary aspect of silver which is going to drive it. I don't think that at all. I think that will drive gold, but what's going to cause silver to far exceed the performance of gold is the pure supply demand. we're seeing demand pick up each year in silver, and that's going to continue. And we, as a human race, we've never consumed as much silver as we're consuming now. And the demand on manufacturing of electronics, automobiles, future robotics, electrifying the planet, bringing technology to the population of the world. The supply of silver just will not handle the demand, and grades are dropping worldwide. We're seeing mine supply dropping. Silver is a very rare metal, and it's not understood that it's as rare as it is. We're mining 10 to 1. In other words, for every 1 ounce of gold, we're mining 10 ounces of silver. That's crazy when you have a ratio of close to 80 to 1. That cannot last. And, the market will wake up and psychology will change. And that's what's going to change the price of the metal. It's psychology when the world wakes up and says, hey, silver is actually a very important metal, and we need this metal to electrify the world and continue doing what we're doing as a human race. And then the street's going to wake up to it, and the metal will explode in price as far as I'm concerned.
Any comment on that, David? Do you think it's going to be more about supply and maybe the monetary will be the icing on the cake, or do you think it's the monetary that will be the huge shift?
Well, I think, the metal doesn't care where the demand comes from. I mean, when it's when it's taken off the market, it never says, are you industrial demand or are you, monetary demand? But I still think that as gold goes, that the shift will be primarily to the monetary side. But Keith makes a great point. I don't have anything negative to say about it. And all the trends are there, and I don't really want to take away from anything he said. I just will say that, when people think about why are they buying the metal, everything that applies to the gold market applies to the silver market. So if gold's going to be driven by monetary demand and there's a run to gold, that will spill over into silver. It is a small market, smaller than the gold market. And there's so many people that would want to have it because of the confidence factor. I think it will drive the market. That's what you saw in 1980, and I think you're going to see it on a global demand in the next bull market, or this next leg up in this bull market.
Well, gentlemen, I want to ask you one last question each on currencies. You guys have been very generous with your time. I think anyone who's interested in silver has a pretty good idea. For people who are interested in David's work and stock picks and research, you can go to silver-investor.com. We'll have links. If you're interested in Keith Neumeyer's companies, he's got First Majestic Silver trading on the New York Stock Exchange under AG, or First Mining Finance, which is his precious metal acquisition company, which he's been acquiring gold assets. It's quickly become one of the fastest gold developers in the world in just 9 months. And you can find his company on the TSX Venture under FF. David, the Fed finally raised rates, and we actually talked about this at the Silver Summit the last time we saw each other, and you thought that they would, and they did. What does 2016 look like for Janet Yellen? Can she get away with another rate hike?
Yeah, I think she can. I wrote about it in the December issue. I won't belabor the point now, but I'm of belief that the Fed is in a very tight spot, but I think that they will continue to raise, and I think they'll do that as long as they can get away with it. And I'm of the belief that it can take place a few more times, and again, that's outlined in the December issue. I don't want to, again, belabor it, but I don't think that and as far as her personally, I mean, I hate to pick on anybody, but from my perspective, opinion only, she looks pretty lost when you look at her on these television spots when she's doing the FOMC open market talk, and I think she's going to be even more lost in 2016.
Keith, every time I talk to you, you're in Switzerland, you're in Germany, and then Hong Kong and Mexico, of course, doing business in Canada. For 2016, for cash, do you think the dollar is the safest bet for the time being?
Well, personally, I'm all in, and when it comes to investing in gold and silver, and mostly in my two companies, First Majestic and First Mining. So, the dollar can go up and gold can go up at the same time. There's this perception that you need that gold it will go down every time the dollar goes up. It's not necessarily true. We saw when gold, hit its previous high in 2011 that the dollar was actually quite strong during that period. So, the U.S. dollar, even though it's being printed like crazy, it's the worst of the worst, it's the best of the worst. So what else are you going to invest in? I think that's really where the dollar support is coming in. Where you see all these emerging markets just fall apart, and the perception that the U.S. rates will continually go higher, puts this automatic bid under the dollar as well. So as the rates go up, the dollar will go up, and I think gold can go up at the same time as I stated, but the dollar will have its day, and when the world wakes up to the fact that the rates are going to start going down again, and Yellen had to raise rates in order for her to lower in the future because they're trying to avoid negative rates. We're seeing negative rates in Italy and Spain and so on, and Switzerland. The U.S. sees this, of course, and they don't want to get into a situation where they all of a sudden have to start offering negative rates because that's going to be extremely deflationary. In order for them to lower in the future, they had to raise. So the question is, how high will they raise in 2016? And they're likely going to get it up to 1.5% or 2%, and that my guess is going to be around the top, and then that'll signal the time to start really piling into gold. And I think that's when you're going to start seeing the big institutional money start to switch out of U.S. equities and into gold or mining equities.
Gentlemen, you've been very generous with your time. I have one last question. It's probably the question on most of the audience's mind. 2016 forecast for both silver and the mining shares. By the end of year 2016, are we higher or lower today? David?
Higher.
Keith?
David, that's a very short answer.
It was.
Yeah, I definitely think it's going to be higher. 2015 was a pretty tough year, and we saw the end of 2014 looked pretty ugly. Then we had a great rally, and then it kind of sucked for the rest of the year. And we're having another rally now, and we're probably see the summer maybe a little bit soft as traditional it seems to happen every year, and then now we're going to have probably a big rally towards the end of 2016. And Joe, just one other thing I want to mention. First Mining Finance does trade on the OTCQB in the U.S. The trading symbol there is FFMGF, just in case you needed to know that.
All right, well, that's great. I'll have both the symbols as well as both of your respective businesses. Thank you so much, gentlemen, for joining me again. David Morgan of Silver-Investor and Keith Nuemeyer with First Mining Finance and First Majestic Silver. Thank you, gentlemen.
Thanks, Daniel.
Thank you.